Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's Landon Swan, the co-founder of LikeFolio. Thanks for joining us today, Landon.
Hey guys, good to be here.
All right, so we're talking Nike, and I've seen this over the last 2 weeks probably, Landon. I've seen probably 10 price target cuts on the stock, and I think a lot of it has to do with the stuff that's going on in China, maybe demand waning there. I know that you guys provide a lot of data here in the U.S. Is it positive? Because it seems like the U.S. is kind of taken over. They continue to grow here, but they've got some overseas issues.
They do, and it's what we needed, right? One more macro event to worry about. We had COVID, supply chain inflation. Now let's throw Russia and Ukraine into the mix. It's tough. So LikeFolio specializes in figuring out where people are spending their money, if they like companies and that kind of thing. We're good at earnings calls and short-term and long-term price movement based on consumers, but macro is a whole nother game. We don't even try. So what I can tell you today is what the consumers are feeling about Nike. And one of the biggest things that I've seen with Nike is surprising is their increase in happiness. So they were several points, I think 7 points below Lulu when it comes to happiness, and now they're 3 points above. They have made huge strides in happiness. A lot of it has to do with new colors that they're coming out with, new different combinations and customizations, as well as collaboration. So you can see here on this chart, that top single line is the overall happiness, and they were pretty flat for quite a while, sitting around the mid-60s, and now they're in the mid-70s. Huge run up over the last not quite year, so maybe 6 or 9 months, but absolutely monstrous move in happiness. And that LikeFolio tends to focus on purchase intent. That's where people say they're spending money, but happiness isn't also a very good indicator, especially long term. And Nike's definitely doing something very right here. They're actually leading the pack when it comes to happiness. They're leading the pack when it comes to dimensions and purchase intent change over the last 3 months, 9 months, you name it. So Nike's doing extremely well. They're the leader right now. And this is that chart that we love to throw up, that scatter plot with the, the x-axis being change in mentions, the y-axis being happiness. And you can see Nike where it needs to be in the top right, actually overtaking Lulu as the top right position. So Lulu's been sort of a darling of LikeFolios for a long time, but Nike's really getting it done. We've got to follow the data. And I think one of the things that, as we always talk about the Nike effect on companies like Foot Locker or Dick's or others, the direct to consumer is huge. I mean, that is, I think, what's making Nike really perform extremely well right now. And they were in the right place, right time with COVID. You can see here when people are talking about going direct to consumer DTC through Nike, huge run up through COVID, and it's now kind of normalizing up about 50%. Versus pre-COVID levels. So this is showing us that while obviously you're able to go out to stores now, so you don't need it as much as you did during the COVID times, but it has sort of this huge sticky factor, and it's hitting a level, it's returning to a level that's much higher than the past. So this is a behavior change. People are going around Foot Locker, they're going around Dick's straight to Nike, and this is big for them. So I think they're hitting kind of on all cylinders right now. The happiness being the most impressive. You don't see a 10-point move in happiness on LikeFolio data in the short amount of time that Nike's done it, up to 76% now from 66. That's monstrous. Again, overtaking Lulu. So I would say long term, we're pretty bullish on this name. Short term, we love to do the negative 100 to positive 100 earnings score. Right now, they're sitting at a plus 37, which is firmly bullish, not insane, buying calls or anything like that, but it's firmly bullish, and we like them in this spot.
Landon, you come on this show a lot with your mentions versus sentiment, and you always say that top, up and to the right is the best place to be. Rarely do you come on this show, Landon, and have a group of stocks where the biggest is also the best, right? And if you look at the dots for the size of the company, this is where the biggest is also the best and happy and the happiest. And, this company continues to innovate, and they continue to not be afraid to be controversial. But don't you think, for our viewers and the positive sentiment that you have, plus 37, like you mentioned, It's still going to be guidance, though, right? I mean, they've got a China problem, now a Europe problem, and they've got inflation problems, and they've got supply chain. But if they guide to the future better and give a positive outlook going forward, like saying a lot of these problems will be through that by, second half of 22, things like that. Don't you see that as the most important? But I want you to comment, really, for LikeFolio's purposes, comment on the fact that how many times you see in your mentions versus sentiment, the biggest is also the best and the happiest.
It's very rare. It's always the new up and coming company like Lulu was several years ago, taking that top spot. And we've done other shows where we kind of throw in a small one that's growing and they're in the top right. Pretty rare to have Nike the size that they are. And you're right, the size of the dot kind of demonstrates the size of the mention. So they are by far the largest among these: Under Armour, Adidas, Lulu, and Nike. And so it's pretty rare to have them up in that spot. But I agree with you when it comes to how the stock is going to react. The guidance is extremely important. So last quarter, they did really well in North America. I think their sales up 12%. Their Asia sales slid off a little bit as expected with COVID and whatnot. So I think that one caveat we've got to put out there, everyone knows this if you've been following LikeFolio on this show, we're focused on English-speaking tweets. So we can do really well at predicting what's going on with North America, but we're not going to do so well over in Europe or Asia. So that, I think, is a big concern. I think that they're going to do well in North America. That fueled them last quarter. The stock reacted well. So hopefully that's enough. And hopefully also a lot of these, scary things when it comes to Asia and Europe are already out there. There's no surprises. So it's almost like any news has to be good news unless things get incredibly worse, which, fingers crossed they don't. But I think right now we're in a spot where most likely significant news coming from those areas is probably going to be good, and hopefully that's priced in. And we think that, like I said, we think that North America is going to perform well. We've also got a lot of trends helping Nike right now. So, for example, when you look at the number of people talking about working out at home, that's down about 25% year over year, whereas people joining or attending a group fitness class is up 24%, and new gym memberships are up as well. So if you're working out at home, you can throw on the old kicks, no big deal. But if you're going out to a gym, you're joining a gym, you got a group fitness class, you got to get some new shoes. And of course, that's going to benefit all of these companies, but Nike demonstrating that it's going to benefit them the most.
Yeah, and we've seen the fall in the shares pretty significantly from those all-time highs that we saw just probably about 6 months ago. When you look at the results from Foot Locker, Landon, and I don't think you guys were positive on Foot Locker, and you mentioned the direct-to-consumer is where Nike's picking up all their traction, and that actually helps their margins quite a bit. Do you look at the stock and the way that it's fallen and maybe, the price target cuts that we've seen across the board, that maybe a lot of the bad news is priced in? Barron's had an article this weekend on Nike that maybe, a lot of the bad news is already priced into the stock due to other factors.
Yeah, I think so. I think that's kind of what I was alluding to when it comes to, it's all out there, especially the macro stuff. And Nike, obviously, if they come out and they say, we missed on revenue, missed on earnings, they're going to sell off. But the data that we're seeing is the opposite. We're seeing that the numbers are strong, mentions are strong, purchase intent strong, happiness is unbelievable. Again, don't underestimate that happiness. That's not just short term, but that's going to have effect longer term, because that's the kind of thing that sticks around. That happiness number does not move as quickly as it has on Nike normally. So I expect it to stay up and above Lulu for quite a while now that they're over. So I agree with you. I think a lot of the negativity is priced in. You could say that the shares are on sale right now. Obviously, there's a lot going on macro-wise, and this is going to move with the markets in general. But stocks are still reacting to earnings, and we saw it last quarter. They reacted well. We do believe that based on our score plus 37, we do believe that based on purchase intent, happiness, we're leaning bullish. Not like again, not bet the house, buy out of the money calls or anything like that. But if I had to pick a direction, for sure it would be up. No
YOLO calls for this name out of us. All right, great stuff as always, Landon. Appreciate you being here, running down the data on Nike.
All right, thanks a lot, guys.
All right, that's Landon Swan, the co-founder of LikeFolio, bringing us the data points from the consumer. Pretty positive here, Kevin.